Let's talk about the thing nobody in trading wants to admit. The market doesn't scare you. You scare you. Fear is the single most destructive force in a retail trader's account. Not volatility or spreads or even a bad strategy, but fear. Because fear does not just make you lose trades, it makes you lose trades you should have won. And it makes you win trades in a way that guarantees you will lose over the long term. You do your analysis and the setup is clean. You open the trade and within 30 seconds you are staring at the chart, watching every pip like it personally owes you money. Price dips slightly against you, completely normal and well within your stop. And something in your chest tightens. You close it early. The trade then goes exactly where you said it would go and you watch it hit your original target. You made a fraction of what you should have made or nothing at all. That's a pattern, not just bad luck. And there is another version too. You miss an entry, price has already moved, the moment is gone, but your brain starts rationalizing. Maybe it is still valid, maybe I can still get in there. So you chase it by entering late and your risk to reward is terrible and you're already slightly emotional before the trade even opens. Fear of missing out is just as damaging as cutting a winner short. But why does this keep on happening? Because your brain is not wired for trading, it is wired for survival. Losing money feels like a threat, and when your nervous system perceives a threat, it wants action. Close it, do something, make the pain stop. The problem is that action taken from that state almost always makes things worse. The traders who last are not fearless, they have just built a better relationship with uncertainty that does not require them to act on it. They understand that a losing trade is not a signal that something has gone wrong. It is simply a trade that did not work. In a profession where that is supposed to happen regularly. Process is the only real answer here. Not motivational content or more hype, and not more chart time while you are already anxious. A written plan that tells you exactly when to enter, where your stop goes, where you are taking profit, and what your position size is based on your account risk. When everything is decided before you are in the trade, fear has fewer entry points. You're not making decisions under pressure, but rather following what you already decided when your head was clear. Journaling helps too, but only if you are honest about it. You don't just log the numbers, but write how you felt, what you were thinking, and what you did that you were not supposed to do. Patterns show up quickly when you put them on paper. This way you start to see that always you cut winners early on Fridays, or that you always overtrade after a losing session. The journal does not remove the fear, but it does show you exactly where it lives. And then there is of course position sizing. If you are genuinely frightened every time a trade moves against you, you're probably risking too much. So reduce it until you can watch price move without your heart rate changing. That is the level you can actually trade from. You can always scale up later once the process feels automatic. Fear does not disappear in trading, but you can get to a point where it is just background noise. It's still there, but it's not running the show anymore. And that is a completely different way to trade. That is the real work. The market is not in your control, but how you handle fear is.